I thought we would start, since we're sitting here in New York, you're so associated with San Francisco, and I think San Francisco as a city plays a part of the story of your overall life and success. But my understanding is your family originally was from New York. So tell us a little bit about how they ended up moving to San Francisco and a little bit about your early family life.
Of course, I don't really remember it because I wasn't around then, but the story goes, and I've had it investigated, my great-grandfather was a baker in Long Island and was quite successful, I guess, and they bought some property there and they eventually sold it. But I think because they had so much lung issues back then because of all the environmental issues of the time, that was in the late 1800s, and they moved out to San Francisco and then to Sacramento.
And when you were growing up, was your family investing? What was the nature of your family's business and what you?
My father was a lawyer, and he had a few investments that he had along the way, and so I started asking him about that. And by that time, we were living in Santa Barbara, California, where I was going to junior high school or high school. I've forgotten exactly when it was. I was about 13 or 14, and he said, well, here are the stock tables. They weren't very extensive. They were pretty limited, this kind of section. And I said, oh, those are pretty interesting. I started following the ups and downs of these prices. I said, Dad, I think I could make money at that thing.
And this was, I mean, you were saying you're 13. You're kind of a well-known dyslexic. I think back in the day, they didn't even have the word dyslexic, right? I mean, so what was it like in school? How were you dealing with words and numbers? And when did you even discover that you had quote-unquote dyslexia?
Well, I was, actually, I always had a problem reading even to this moment. And so I got through college, got through graduate school by luck. A lot of luck.
But just back up for a second, because again, I don't know the nuances of dyslexia, but I know it can be very difficult to read and to deal with numbers, and yet you managed to get through elementary school, junior and senior high school, and go to Stanford. Yeah. So this was not just like you managed to get through it.
But the reason why I got into Stanford, I claim, and I think it's true because these are the facts. I got to know the Stanford golf coach, and we actually played as the freshman team at Stanford played against our high school team, and I played particularly well in the Stanford golf course that day. I was in high school, and the coach said to me, his name was, of all names, Bud Finger, and so he said, you ought to apply to Stanford. Maybe we could help you get in. He didn't say get in, but help you get in. So my SATs were terrible. But my grades were quite good, and back then they counted grades and effort as much as they did SATs. SATs were just coming out then. This is now, of course, in the 1950s,
right?
And so somehow they got me in there.
You had to work harder somehow to get it all through.
When I got to college, I was competing against all these wonderful, bright kids that had gone to the wonderful East Coast prep schools, and I just came out of a public high school. I was totally behind the 8 ball from day one.
And would you even go so far as to say that the dyslexia in some ways helped you in that?
Well, I think it helped me a lot in different ways over my ensuing years. I thought, I knew that I wasn't bright at everything, and I was, in terms of building a business, I was able to sort of surround myself with people highly capable in other subject matters that I wasn't particularly good at. And I was pretty good at math, and I knew numbers pretty well. That was my forte. Mm-hmm. And so, but other people could help me along the way, and I had enough confidence to know that I was not good in everything, and that was the dyslexia thing, but I was very comfortable in having people be a part of my team. Mm-hmm. And I think that helped. The humility around that was really essential.
So you go to Stanford, you end up going to Stanford Business School. You had this entrepreneurial verve. I mean, you kind of talk in the book about wanting to be your own boss, wanting to control your own destiny. Where did that come from?
Well, I think it comes from necessity. When I was a kid, brought up in a little farm town near Sacramento, California, which the name of the town is Woodland, and a town of about 5,000, a very agriculture town. My father was a lawyer, and so, but that time, my family was out of the years of the Depression years, and so money was not particularly available. And so I did a lot of odd jobs and so forth, and I thought, man, I don't want to live in poverty all my, we weren't in poverty by any means, but I didn't want to live where every decision was a financial decision. Mm-hmm. Even buying a bicycle when I was a young man, we had to go buy a used bike.
You were thinking like financial independence. You wanted financial.
I guess that's what you called it back then. I didn't think that word at the time,
yeah.
But that's what it really meant.
And so how did that desire transition to really starting, as an entrepreneur, starting the original Charles Schwab Corporation?
Well, I did a lot of business early on as a kid, of course, and but I always had, and someone told me one time, being a dyslexic, you know you're not going to be a particularly good employee. You got to sort of work for yourself, mm-hmm. because the employer would not really understand your issues. And so I think there's a tendency for dyslexics who are sort of know something about business to go for the leadership role. But keep your dyslexic really quiet. Don't tell anybody. And so I was one of the early guys that sort of came out of the closet on this issue when I was about 40, in early 40s. That's when I found out I really was dyslexic through my son being tested. Mm-hmm. And so that was clearly my 40s. But anyway, it's been a part of my life. Doesn't run my whole life,
But I mean, even something specific like writing this book, did you write it or do you dictate it?
I dictated all of it. Mm-hmm. It's all, in fact, the fellows traveled around with me who met in the back room there, Greg Gable, I think he's in the audience, helped me really refine the thing into a readable situation.
All right, so back to now, you're getting ready to start Charles Schwab, and this idea of discount brokerage was a pretty nascent concept. You know, you're going up against Merrill Lynch and the giants of the industry. I mean, it's not the most natural thing of like, I'm going to start a company and go up against Merrill Lynch. So walk us through a little bit of those early days.
How would you ever have done that? Well, here I was in San Francisco, and I was brought up, my job was I was a securities analyst, and I was a portfolio manager for a small investment advisory firm in San Francisco. I actually was in Menlo Park at the beginnings when I was still going to business school. I worked nights and weekends for this particular little firm. So I had a lot of brokers calling on us. They wanted to get our business, they wanted to pitch us ideas along the way. And I kept really close track of those ideas. I had a big notebook of stuff, and some of these things began to unfold as, these are really crazy stories. And a lot of it was built on inside information, and they knew the director of the company and this kind of stuff, trying to seduce us into buying these stocks.
Just a classic cold call or broker call. I got a story for you,
yeah.
Type of thing.
Well, it was even beyond the cold call event. I got to know them. They would invite you to dinner or play golf or tennis or something. And it was about developing that really close relationship. So I would believe anything, but I kept the notebook, right. And I didn't believe everything. And so that was sort of the fundamental setting of the Wall Street brokerage firms, was selling stories. Mm-hmm. And some were accurate and most weren't.
And so you just felt you could compete against it.
So I thought when actually as it unfolded, it was 8 or 9 years later, that Congress and the SEC decided that the big commissions were way too out of line, and they did nefarious things with excess commissions. They entertained excessively. They did all kinds of things because there was such a fat amount of money involved there that I thought, well, there's a change coming, and I know the SEC was pushing for deregulation, and eventually came in 1975. So that gave us the big opportunity. I said, aha. I think I can create another kind of brokerage firm, not based upon the thinking of Wall Street generally. So we created something for the people.
And very early on, there was a kind of seminal moment where, because you don't strike me, and I don't know you very well, but you don't strike me as a huge ego guy. And
no.
You don't strike me as a guy whose first impulse was, I'm going to name my company after myself. So how did that happen? And it turned out to have been a brilliant move to name your company.
It was. I went at the time, this is now early 1973, And I had just, well, the little company was called First Commander. I wanted to change the name, so I went, could I name it? Because I then owned 100% of the stock, which was a pretty small amount of money involved, and it was all borrowed money. And so I wanted to change the name of the company to Schwab Investment Services, or something like that, Schwab Research and so forth. And the Secretary of State in California said, no, they can't do that. It's too close to Schwab drugstore in Los Angeles, which is a very famous drugstore at the time because all the movie stars would go there. So finally, after many rounds of discussion, I said, well, how about just my name? And so Charles Schwab. So that was the name of the company at the beginning. I had very few employees, and so it was serendipitous, I guess you might say that.
Well, talk about why that worked out so well. Why did
Well, I think later, as we started advertising, my marketing guy, who helped me, advertising marketing guy, said, we just had a wonderful article written about us in the San Francisco Examiner. We were, a company of about 10 employees, and we were providing discounted commissions for people along the way. And most of our ads were one column, 3 inches. That's all we could afford. They're really inexpensive. In the West Coast edition of the Wall Street Journal. And finally, the results were okay. Saved 75%, all that kind of stuff. Said, let's try that article that just ran in the Examiner. There was a great picture of me leaning over, at that time, a Bunker Ramo machine. I don't know if people remember that was the quote machine. And he said, well, why don't we put that in the ad and just say the same thing? And I said, oh, you're kidding me. What's my wife going to think? What a kind of egomaniac would ever do that? What are my friends going to think? Particularly my friends working at traditional firms. I said, okay, we'll do it once. And it worked. The results were about 10 times better than the other way.
It's just the personification of somebody
was
that you
there.
could trust.
I could
and
find
a real
him.
person.
Yeah, real person dealing with my money. And so that obviously was the beginning of
all right, so let's go
that.
forward a little bit. So you're starting this company, and you're actually now having real success. You're growing the business
like crazy.
Incredibly well. And in 1983, you make the decision to sell the company to Bank of America for $55 million, the whole thing.
That was a lot of money.
And you're like, wow,
wow,
I am rich, I'm successful. What a brilliant move.
Yeah,
Okay?
when you start from zero, Glenn, 55 is a lot.
Trust me, 55 is a lot to anybody. But that happiness lasted about 4 seconds. What happened?
No, probably a couple of years, actually. I went on to the Bank of America board, which was probably a mistake that they shouldn't let me do that because for a lot of reasons. So 4 years went by after the third year of waiting and hoping the bank would do well because I had all my nest egg in their stock.
So they bought you
and
not
their
for
stock went.
So they bought you for $55 million in stock, not in cash.
It was a tax-free transaction.
Got it.
Boy, watch those things. Let me tell you, cash is pretty good.
And so the stock of Bank of America over that
And
period.
from 22 right on down, I think it eventually hit 9.
Wow.
Yeah, but I sold out at 17. So.
Okay, but so you sell everything to Bank of. You sell everything to Bank of America. You're celebrated. You're happy for a short period of time. Their stock is tanking, but Charles Schwab inside of Bank of America continues to grow.
We're a wholly owned subsidiary. We were a fantastic subsidiary. We were growing straight up.
So this is again proving your brilliant investing acumen. You sell for $55 million. You go to the board, which you're on, and you say, look, I got to buy my company back. This isn't working. And you pay almost $300 million to buy it back.
Yeah, 270.
In a period where their stock did nothing but crater and cost you your $55 million.
That's what a nice guy is. Maybe an entrepreneur too. I mean, how could you be so stupid to buy something back for 6 times what you sold it for?
But it worked out okay.
It worked out okay, yeah. You look at the numbers out, and actually, as it turned out, we did a pretty fantastic, which is discussed in the book, the leverage buyout that we did. And so the equity I put into was only $30 million.
To buy the company.
I borrowed the rest.
Well, one thing that, and the book talks a lot about this in addition to that, but as you said, you had your $55 million in stock that was destroyed in value dramatically, but all your employees had similar things, right?
Yeah.
They had their wealth
Most of them did. Some
eroded.
Well,
and tell us a little bit about what you did for those employees, because I think it is unprecedented in a lot of the
that was
companies that I'm familiar
well.
with.
Thank you for pointing that out. I don't. What I did was I measured all the losses that our employees had in terms of their stock ownership, and I gave them warrants on the new company when we bought it back. On 15% of the company went to them as a pool based upon their losses on the previous slide of Bank of America. So they all came out substantially ahead of the game eventually, but it took a few years.
Right. And then, of course, the company kept growing, and you really built it to in a whole new level. Now the equity value of Charles Schwab is around $50 billion.
Something like $50 billion. Yeah. So it worked out pretty well.
And Ari, in the introduction, mentioned that client assets are $3.5 trillion. It's hard to even fathom. I mean, can you even imagine the kid you were?
No.
There's a picture of you in this book that you showed me of you as a child. Could you even remember imagining something like being controlling of a $50 billion company?
Of course not. No, it's all serendipitous, I guess. You just keep doing the same thing over and over again, and that worked out well.
All right, I want to talk a little bit about you being a CEO. So you were the CEO through all this growth. You quote unquote retired in 2004. Right. A little bit of a Michael Corleone thing. They brought you back 4 years later.
They were unhappy with the CEO who was appointed. He was in the slot for 9 months, and David just didn't make it with the board.
And so they bring you back in. You do it again. Recharge the company, get it back on the right track.
And we changed the model. For the first bunch of years until 2004, we were pretty much focused as being a pure discount broker, a transaction-only kind of firm. And we knew we were getting to the very tippy top of that as a business, exclusive business. So I decided, with the help of some of my associates, to turn the company into more a relationship company based upon having financial consultants, and of course that model is what we have been flourishing in the last since 2004.
So you retired again for real now in 2008, which is now over a decade ago.
But I wouldn't really retire. I remained a very active chairman.
Well, that's what I was going to say. You don't strike me as the guy that's good at retiring.
No, I'm terrible at it. Terrible.
So, I mean, your name is obviously on every product, on every advertisement, on every door in the building. I mean, can you really like step away and go play golf and not check the markets?
You might talk to my wife about that. I think she'd like to do a little bit more of that, but I always drift back. I can't help myself. I love the company, and I love the purpose of the company. What we're doing is, for the average investor, we're really making life better and easier and more effective for them in terms of their financial outcomes.
So talk to us, you mentioned golf earlier. How has golf played a role in your life?
Well, my God, how I got into Stanford. I got to Stanford because that was a pretty good move. And then, of course, I still play it today. We actually played golf last summer.
So one thing about golf that I think you did when we played, do you remember the first time you shot your age, which for those golfers,
I do.
That's a very big deal.
I was 74, and I played in the AT&T golf tournament. It was a practice round, actually. It wasn't the real round, but we were playing Monterey Peninsula, and I shot 74. My friend who was keeping count of this whole thing said, "Oh my God, this is on the AT&T. Do you know what you do? If you shoot par here, you'll be one under your age in terms of the score." And I got nervous. And I actually had a bogey in the hole, so I shot my age.
Wow. And even now in your 80s, are you still shooting your age kind of regularly?
Pretty regularly, yeah.
Yeah.
No, it gets easier every year.
All right, so now, with all the great golf courses that you belong to, you had this desire to build your own golf course.
Oh, two of them, actually.
And well, the one in particular on Hawaii, in the Big Island, which certainly has enough golf courses. Why did you need to have your own golf course?
Well, a friend of mine and myself would always end up in Hawaii at Christmas time. That was, when you live on the West Coast, that's where you go for the warm weather. And at the time, the wonderful Japanese owned all the hotels in Hawaii. And that was back in the 90s. Of course, when they had their great boom in Japan. Then they fell in bad times, but anyway, their management, we never liked their management. The tee times and all the way they managed these golf courses we didn't like. So George, a good friend of mine, George Roberts, and I said, let's build our own golf course. We'll get other people of similar mind to come and join. And we found a great place to lease some property for 100 years, which we did, you know about that. And we built this fantastic golf course, I recommend, called Nannea, really good. And so we set our own rules there. No rules done by a foreign country.
And then talk a little bit about the Schwab Cup. What's that all about?
Well, we have been supporters of the Champions Tour for, gosh, almost 15, maybe going on 20 years now. And so we have events. When the senior tour, it was called the senior tour originally, now it's called the Champions Tour, around the country. It's for people who are over 50, you qualify. So that's the perfect kind of group that we want to attract to, who would like to invest also.
Your demographics, so to speak.
Demographic, perfect demographics. And so we've been doing that for a number of years. So the Schwab Cup itself is sort of like the FedEx Cup. Mm-hmm. We started way before the FedEx guys. They copied us. And so anyway, coming up, it'll be in November again, now in Phoenix, the Phoenix Country Club. We'll have the finals of the Schwab Cup early in a month or so. And so we reward the champion tour winner with a big bunch of money and all that stuff, handshakes and so forth.
Awesome. So for all this great stuff that you've done for golf, and you're a great golfer, and you're a great guy, and you're a CEO of one of the biggest companies in America, what is the story as to why you're not a member of Augusta?
Why what?
Why are you not a member of Augusta?
I guess they didn't like a guy who was rattling Wall Street. I don't know.
It really just...
Yeah, I don't know.
Pissed off the wrong person.
I think it pissed off the wrong person.
Wow. That's too bad. They're lost.
Actually, at the time, the guy who was the leader of the Augusta, who had a brokerage firm.
Oh, he had a brokerage firm. Got it.
So you didn't want to have somebody close to me be in that club.
Got it. All right, let's talk for a second about art, because you are clearly viewed as one of the great gentlemen of the art world and one of the best art collectors in the world. So
Thank you. I've never heard that one before.
Well, it's true.
It's actually my wife. She has a fantastic eye for art.
And do you do everything together?
We do it together. I make decisions, sort of the final decision. Can we afford to buy that thing?
Well, do you ever go rogue? Come on, you got to buy some things that Helen doesn't want.
No, once in a while. I only now, I did that a couple times. It made her really unhappy. But we collect art together and have for 30 years now. And I have to say, art itself has probably appreciated more than many of my stocks, including my own.
Yeah, it's been amazing. And do you have a particular aesthetic or something that you would describe as kind of a classic example of what you like?
We are very contemporary collectors. We're, I would say, I was the chairman of the museum for the last 10 years and helped rebuild the San Francisco Museum. Went out fundraising, raised $650 million for the redo of the building and endowment, et cetera, and have been contributed to the museum many pieces of art and art shows and things of that nature. So it's been a great place for us to give back to society, to San Francisco in particular.
But is there anything within contemporary art that you like in particular? Are you an abstract person?
Yeah, well, we're all of from 1950 on, basically, is what our, the Warhols, Jackson Pollocks.
Now, is there any one acquisition story that you want to tell us, either maybe in a time of economic distress or the market?
Well, I tell you what, it was really a great moment. We're great friends at the museum at the time, but this is now 1990. No, pardon me, it was 1999. And as I mentioned about the golf course, Japan was going into a real descent.
Yep.
And they had, many people in Japan were collecting art when things were really in the early 90s. And so what happened, the banks who lent money on all these pieces of art all those pieces of art ended up in a vault someplace, in a bank vault, because people defaulted on their loans. And so we were invited, myself and some people at the museum, were invited to go to Japan and check out the vault.
Wow.
Well, we started pulling out these racks and racks of things, and we bought some incredible pieces that were, in collateral for these loans that had defaulted.
From the banks directly?
From the
Wow.
bank directly, and some incredible pieces that we have now. But we're going to give them all to the museum. But
that's awesome.
yeah.
So you mentioned earlier
Bacons and Richters and oh God, it goes on and on and on.
You mentioned earlier that one of the keys to success was choosing good people to work with.
Yeah,
and
for sure.
You have certainly chosen one of the most well-respected and amazing art advisors in Mary's lot to work with. How do you work with Mary? How does that happen? What's her mandate? And does she just show you things that she thinks you'll like? Do you go together to look at things? How does it work?
Well, my wife is totally passionate about that. So she goes to most every fair. I go many times over to Basel and so forth. She goes to most of the fairs, the Frieze and the things here in New York, gallery openings, new artists that are being presented. Obviously, your museum in New York. Here we're very much associated with Tate and London and so forth. And so she's really knowledgeable and works really closely with Mary's lot. And so I'm sort of brought in towards the end of the decision making. When you have to write the check.
Yeah, you're the final approval.
Yeah, but we sort of know consistently sort of what we want to buy, and many times we've traded things. We could buy a 4 of an artist, and we really have an opportunity to buy a 9 or a 10, with the thought that we're always upgrading our collection along the way. Mm-hmm. And she also is now very much into the younger art set, not just the old guys and the old men and old women, but many of the new artists emerging.
And is that exciting for you as well?
I like that, and we're big supporters of the new modern, contemporary thing in San Francisco. Mm-hmm. So we have a new curator there that we're supporting. In fact, I should say, next week we have the opening of a great new contemporary thing in San Francisco. You should come.
All right, terrific. I want to talk to you for a few minutes just about family and your family. And you talk in the book very openly and honestly, and sometimes giving yourself a tough grade at times. And you say, especially in the early years, you were not a great father potentially. That you
didn't have the time.
Yeah.
Did not have the time. I had 3 kids early on, first marriage. And I had no money, so I was really focused on my work, and so I didn't go to the soccer games, the baseball games, etc., as much as probably a fraction of what you probably do today. So I really honor the young parents today that spend more time involvement with their kids, and that's just great. And I think most of you guys women are having children a little bit older than I was. Yeah. My first set.
But what would be the advice you'd give? Because there's a lot of passionate entrepreneurs out there that are focused on their company. What advice would you give somebody that wants to try to have balance?
I think just allocate a little bit more time than I did. Instead of, I was probably 4% of the time, make it 14% or 20% of their time devote to their kids' activities, because that time goes away very quickly. Yeah. And just allocate the time.
On the other side of things, the other thing that comes through in the book extremely clearly is you really have an amazing life partner in Helen. And not just outside of work, but also at work. You mentioned art, philanthropy. It really comes through as an amazing
Well, we've done a lot together, and common interests and so forth. And she, like myself, want to give back to society. Art's not just our only thing. We do lots through our foundation, through many other things, particularly I'd say emphasis on education, charter schools. We're really supporters of that, because education is the only way you can really give someone long-term hope for a change in their life, change in the way they are and their direction that they're going.
No doubt, totally agree with that. What are some of the things you're spending your time on now that you do have? You're not retired, but you have a little bit more time on your hands.
Well,
what are the things that you like?
The other thing that really is of deep interest to me is all about financial literacy. And what does that mean? It's all the things that kids, so we do a lot at Schwab with Boys and Girls Club, for instance. We probably put a million kids over the last 10 years through our program about money. And there's a little program we have that's 3 or 4 sessions of just learning about some of the basics there. But still, the necessity for understanding in our kind of society, in our kind of economic society that we have, people have to figure out a way that they understand, because they're responsible for their own retirement, essentially. Yes, we have Social Security, but people don't realize, early on about credit cards and what that can do to you. It can be a disaster for people. They get into that, they end up many in bankruptcy and so forth, student loans, all the things that young people end up in bad positions financially. And so literacy, financial literacy, whether it's Boys and Girls Club or other kinds of things that we try to put a lot of time in and try to help kids learn about their responsibility, their obligation to themselves and the responsibility to society to be better financial citizens.
That's fantastic. One of the things that I heard you've done in your spare time, which I had a hard time believing, especially looking at you right now, but somebody told me they saw you at Burning Man.
That was a misidentity.
No, come on.
I have flown over Burning
I heard
Man.
you've been to Burning Man.
No, I flew over it and we looked down there. No.
You're not going to own up to going to Burning Man?
I would. I definitely would if I had. No,
All right.
That was incorrect. I must have been taking my book with them or something. Look at that.
All right. I had it on pretty good authority, but I'll let you go on that one. All right. Let's talk just some words of wisdom and some thoughts about, you've been a CEO for a long time and you've certainly witnessed a lot of great CEOs.
Yeah.
What do you think are the 3 key traits of a great CEO?
Well, I think number one in my case is having humility. Express humility to some degree. You might be particularly gifted in certain things, but that's okay. Forget that. Think about your humility, because people will respect you if you sort of talk about your mistakes along the way, and you honor the person who really has been creative about some particular thing in your business life that they did really well. Honor people and their accomplishments. And so put yourself second to them in that kind of relation. I think you begin developing a trusting relationship. I think that's highly important. I think certainly the subject matter, whatever you're on, make sure you're deep in understanding what that business is about. And certainly in my case, financial services, I'm deep in my understanding of that. And I had a lot of experience along the way that helped me get deep into that subject matter. Beyond that, I think you've got to, again, it's sort of related to the first, rewarding people for their accomplishments all the way through it and recognize them. And it's not easy to do sometimes, but be certainly aware of that. And if you're not good at it, make sure you got an HR person around. Tell and remind me when I should be rewarding people or thinking about people. So in my case, I go around to branches and talk about and thanking people for their incredible service to our clients.
Yeah.
That's really important. So it's.
I mean, that humility comment, I totally agree with. Is that something that you had all the way through, or is that something
I think
that you really developed?
It came out of this understanding that I had this thing called dyslexia. And
Thank you.
More questions. I think that helped me develop an understanding that I was not great at everything.
And let's just say another 10 or 20 years, not being retired at Schwab. You've had such an unbelievable life so far, and I know you'll do so much more.
Pretty lucky guy.
What would be a few of the things you would love to be talked about when people are talking about you?
Well, I think we have still places to go with the development of the business in terms of how we take technology and help people do better. For instance, the older people are reaching retirement, or in retirement. It's a very complicated thing. They're now living 10, 15, 20 years longer than they did maybe 30 years ago. How do you manage yourself through with your retirement income and all that? People need help there. particularly.
But that's. I'm sorry, I didn't ask the right question the right way. I'm saying, what would you like people to say about Charles Schwab, the man? What are the things that you want to be remembered by?
I think a lot. The book sort of expresses a little bit of that stuff. That how we created a different company. We took on Wall Street, and we changed the way people have an opportunity to invest in a low-cost way and a more effective way than they ever had before. Mm-hmm. And we weren't exclusive for sure, but a lot of people copied our things along the way, and we devoted ourselves to helping the actual ordinary person do a better job.
That's great, Chuck.
And that would be pretty nice.
Well, I will say that you're being very humble, and I think when you read this book, you'll see a lot of more incredible things and a lot of wonderful reasons why you're going to be talked about in a lot of different ways. One thing that we've done, and we are going to ask a couple of these questions, but everybody here is going to get a signed copy of this book on the way out. So please enjoy that.
Thank you.
I would just ask one per family, please. There's enough for one per family. So you share it with your partner. All right, let's ask a couple of these, and then we'll let you. I know you have a flight to catch. All right. Good timely question, Mr. Schwab. How likely are negative interest rates in the United States?
Well, I think it's unlikely that America will have negative rates, but it's not impossible. There's such a quantity of money. I mean, money is just like any other commodity, a huge quantity of money. So price for money is relatively low right now. And so if we are able to get through some of the difficulties we have in Congress and get on to making some huge investments in infrastructure in America, that would be a huge demand for money, and I think supply of money will go down a little bit, and so rates might go up. But there is a possibility, of course, that they could go to zero. Mm-hmm. But I don't think so. I don't think it's realistic.
8 to 10 years from now, will commission stock pickers still exist? And will Schwab have more or fewer physical offices?
I think there'll still be people who do deep analysis of companies and provide assistance in different formats. It could be mutual funds or even ETFs now are getting some advised kind of ETFs or picking stocks. It's not just an index-based, it's more advised. There'll be people will always be searching for great value and help in the price formation of companies and price discovery. So indexing is fantastic. I really recommend people who don't have the time to deal with all the complications of buying and selling stock along. They're really quite good.
Well, the market is certainly moving in that direction.
Yeah, it definitely is going there. But we'll never give up those who do special analysis, who can probably get a little bit better return than the market return by doing analysis.
One thing we didn't really get into, and I think it is an incredible part of your story, is that you really were driving technology inside of Schwab. You were a very early, you spent huge amounts of money on technology. You were a believer in technology for a long time, and it really fueled your growth.
And that was probably one of the other lucky things that we started on the West Coast. I was right in the middle of the Silicon Valley area. I had many friends in technology, so I was very comfortable in adopting early on technology. I knew what I needed in order to handle all the paperwork, all the things that we had to be at the forefront of that. And so we were lucky because it worked out.
Well, this question relates to that, which is a nice follow-on. What financial services are resistant to automation? I mean, everybody's talking about jobs being replaced by computers. Are there core parts of your world that you think really are not going to go to any type of automation?
Well, certainly help and advice. I think 85 or 90% of the public needs some help in terms of the complications of financial life. Things like simple asset allocation, planning, all those kinds of things, taxes, tax avoidance. There's just a lot of things. Unless you're a full-time professional, which you pay for that service, I think is highly important. So there'll always be a need for good professionals, like in every discipline in life, lawyers, doctors, etc. So it's not going to go away.
And are you active in the VC community? Are you an investor in fintech and
Oh,
venture capital
I
stuff?
have been, and I love venture capital. Let me tell you, I've always loved it. I always loved venture, I guess you might say, and new ideas. I sort of have a real thirst for it.
And so you do spend time.
I do, not a lot, but I have a number of pet peeves that I invest in at times, and particularly attractive to me. Not that, hardly any of that. Some work out pretty well, and that's been okay. But I can't say I'm a great successful investor in venture capital.
Well, Chuck, I really appreciate the time. Everybody, thank you for being here. Don't forget to get your book. Chuck,
Thank you.
Thank you very much.